This week, Ben and I are talking about general GDP macroeconomic factors, looking at some surprising shifts in crop conditions, and then also hitting on the global and domestic wheat markets. Hello and welcome to Brownfield's weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Things are good. How are you today, Will?
Doing all right, doing all right. I know this time of year when previewing, we always touch on baseball a little bit, and it feels like kind of the Cardinals and Royals are both dragging a little bit. So kind of a tough break out of the All-Star break.
Yeah, I love baseball. And Bobby Witt Jr. is everything he's built to be. He's batting like 480 in the month of July, and but we got to have some more help, especially in the relief pitcher area for the Royals to make a deep push here. So
need that marquee closer. And talking about needing some more help, the markets continue to kind of trade flat, but a little bit downward week over week. So a quick rundown on the prices here. September 24 corn down 4 cents in the week at $3.96, hopping below that $4 mark. December 24 corn down 3 cents at $4.12. September 24 soybeans down 34 cents at $10.30. November soybeans down 29 cents at $10.39. Soybean oil on a cents per pound basis for September down 3.64 cents at 42.58 cents. Looking at soybean meal by the short ton for September, up $9.20 per short ton, kind of that shining spot right now in the market at $335. Looking at the wheat crop for September, down 17 cents at 531. July 2025 wheat down 16 cents at 592. October cotton is down 2.53 cents at 67.51. December cotton down 1.46 cents at 69.21. And then that West Texas intermediate crude oil contract down 365 at 74.76. So Ben, a lot of kind of sideways to lower movement outside of that soybean meal contract. What's your general takeaway looking at prices this week?
there's a lot of places we could talk about in this weekly change data here. And of course, there's a lot of negative pressure, I think, across the board. I'm going to choose to just pick on that West Texas intermediate crude oil price for just a second. The global macroeconomy is kind of starting to stow some slowish tendencies. China's economy continues to drag. That West Texas intermediate crude down a little over $3.50 per barrel. Not sure this is bearish the commodity sector to have lower oil prices, but it's certainly not bullish. And I think we're seeing that across the energies is lower prices. And that's kind of providing a little bit of a headwind, I think, for some of these grain and oilseed markets.
Well, talking about some of that flex on that market, we saw recent rulings from the EPA or from an appellate court, rejecting the EPA small refinery exemptions and some of the things there. And you'd assume that mostly impacts looking at the soybean complex and the soybean oil areas. So Ben, what's the overall reaction to that coming out of the market?
Well, so that was kind of a big deal for, I think, a lot of biofuel groups, a lot of renewable energy groups. If there was the expectation that we had taken care of the small refinery exemptions 2 years ago in the 2022 EPA ruling, I think that was probably a little bit, out of line, I guess is what I could say. We've been dealing with these SREs and kind of the battle over these for a few years now. And I think the ruling last week, the EPA mishandled those and they sent the ruling back to EPA, is just another inning. If I can keep our baseball analogy going, it's just another inning in what seems to be a never ending baseball game in the renewable fuel market. So this has a big impact for RINs, those renewable identification numbers. We're going to continue to see those bounce all over the place based on these rulings and however EPA decides to handle this moving forward.
Well, and whenever discussing this topic, it always seems like there's so many layers to this. So just kind of backtracking on what exactly happened. So a federal appeals court, it rejected 2022 EPA rulings denying smaller refineries, oil refineries waivers on the renewable fuel standard. But now this goes back to the EPA to reevaluate. I guess what happens next from your understanding? What's the next step in this type of process?
Well, so the court case is sealed. We don't know all the details. We've seen some posts and different things like that, but the official document is still sealed, at least through I think the first or second week of August here. But EPA will get a chance at this again and figure out, okay, how do we handle these small refiner exemptions? Of course, anything they do for the small refiners is going to be immediately challenged by biofuel groups saying, hey, this is out of the intent of the renewable fuel standard, the laws that were passed 20 years ago, 15 years ago at this point. So it's just a back and forth. Like I said, It's a back and forth battle that we've been, I don't know how many innings we're in at this point, but it just continues, I guess is my point.
Well, Ben, looking elsewhere in the general economy, we've seen almost a level of 3% growth in GDP here in the second quarter of the market in the U.S. Looking at that growth, it's a pretty strong level quarter over quarter. So what does that signal to you on the general economy, and how does that impact the ag markets by proxy?
Yeah, so the second quarter GDP data came in very strong. As you mentioned, up 2.8% year over year. That was double what we saw in the first quarter of 2024. It continues to be driven by strong consumer spending that continues to kind of support, the overall market. And of course, there is concerns that if consumer spending starts to decline, which there's reason to believe it could, and we'll talk probably about that here in just a second. But that the economy would really struggle if consumer spending started to slow. The other measure we got out this week was the Personal Consumption Expenditures Price Index, or the PCE index. This is the Federal Reserve's kind of preferred measure of inflation. It did show month over month growth in inflation, up just 0.1%. So, prices were a little higher in last month than they were in May, but year over year inflation data declined down to 2.5%, and the Fed wants to get that down to 2%. So they are moving in the right direction, the year over year numbers, but those monthly data continue to be stubborn.
So, Ben, from someone who's a non-economist, just looking at all this and trying to boil it down, what it means, when you see growth in the GDP like that above expectations and above the previous quarter, does that spur into how the inflation rate could adjust and what you could expect to see out of there? And then, by a chain reaction, then maybe impact what interest rates and interest cuts could be coming down the line?
Yeah, so it's all really complex. When we think of GDP, we're not necessarily thinking about the short-term federal funds rate that the Fed sets. Sometimes that has an impact on the longer-term interest rates. But in general, as I mentioned at the onset here, of our GDP this quarter was really supported by strong consumer spending.
Mm-hmm.
There's reason to be a little bit concerned about that because we've seen savings rates decline. We've also seen investments start to decline. And eventually at some point, if you have lower savings and you have lower investments, eventually you're going to start cutting back on spending. And of course, that probably has a bigger impact maybe in the livestock markets due to domestic demand than it does the row crops, but certainly feeds into the energy complex as well.
Well, Ben, shifting into, I guess, a more easily tangible topic here, looking at crop conditions, we saw maybe a surprise increase there. Corn continues to tick upward at the very least, just a little bit slightly. And the market, isn't really taking that as a bullish factor, as you would assume. So looking at that, at this point of the year, we're about to turn into the calendar month of August here. So what does this tell you when looking at these crop conditions? I mean, it kind of gives the idea that the market really isn't going to be pushing higher, even after absorbing various weather events.
Yeah, so we record on Tuesday mornings here for our viewers. And as of, 8:18 Tuesday morning, the market is all sharply lower. And really, the crop conditions report was as expected for soybeans, even though soybeans are currently 15 cents down this morning. But soybean conditions were as expected, and the spring wheat conditions for that wheat complex were actually bullish. We saw a nice tick, even though we're looking at a really large crop in the spring wheat market. Conditions were lower. For corn, though, that was where I think all this bearish pressure is coming into. It's kind of this headline number that's causing the rest of the market to react to the downside. corn coming in 1 percentage point higher in late July. We do not usually see conditions increase in late July, but we saw conditions increase pretty much through the heart of the Corn Belt: Iowa, Wisconsin, Illinois, Indiana, Ohio. And that's what led that national number to increase. And certainly it signals that there's a large crop out there. The crop looks healthy. We've had other years like this, 2020 being a good year, where the crop looked really good. And then we had a derecho that hit Iowa that first week of August and really limited the crop size there. And of course, that dragged our national average down as well. But so there's things that can happen. That's my point. But, it does look really good from at least a crop condition standpoint at this time of the year.
Well, I'm looking at overall crop conditions and how that leads into expected yields. Looking at the wheat side of the picture here, we're seeing spring wheat harvest numbers and estimates well above what they were last year. How's the wheat picture shaping up? Looking at this point in the year.
Yeah, so you mentioned the spring wheat, so I'm just going to touch on that for just a second. We don't grow any spring wheat really in Missouri. There are a couple very, very isolated cases, but broadly, it's not something we spend a lot of time with. But it does impact.
Don't pick on our 3 spring wheat farmers in the Show Me State. All right.
Yeah, I know. I won't pick on it, but so the tour last week, the spring wheat tour, had a hard red spring wheat of 54.5 bushels per acre. To give you an idea of how big that is, that's up almost 7 bushels above last year's total yield, and that's 12 to 13 bushels higher than average. So a very large crop coming in the upper plains. Again, Durham and hard red winter wheat also seeing some strong yield increases. When we look internationally, and I think that's kind of where the big stories, or at least the bullish stories, lie in the wheat market, we are seeing, some deterioration in the international wheat crop. Ukraine and Russia, we've had back and forth pendulum swings in that market, but it is again turning hot and dry, and private estimates are now starting to, not only private, but even government estimates in Ukraine and Russia are starting to revise lower their estimates. We've seen Argentina wheat production, which Argentina represents about 1 to 2% of global wheat production. So they're not a huge producer, but we've seen their production estimates come down due to freeze and a very dry July. July has been one of the driest months in Argentina in nearly 60, or excuse me, the driest July in nearly 60 years. So impacting some production around the globe. In the U.S., and I'll just kind of tee this up and we can take it wherever you want. In the U.S., we see very strong soft red winter wheat production again this year, not as strong as what we saw in 2023, but still very strong production. As we look ahead through the marketing year, I think our exports are going to pick up a little bit. I also think our feed use is going to be a little bit higher out in the southern plains in Kansas and Oklahoma. We do actually continue to have some drought in pasture and rangeland conditions, and corn basis remains very strong. And so I think that's going to help bring wheat into the picture. If I can tell one quick story, I was with some Kansas State friends over the weekend, and Curtis and Paige Clausen live in Southwest Kansas down near the Santana area. And I asked them how the wheat crop was, and Paige's comment, she was like, well, we actually had wheat this year for the first time in a couple of years. And the wheat crop looked good. And I think some of that wheat will, not only will it get exported, but I think we'll see a little bit of it get fed. And so, in all, I think we continue to see deterioration in this wheat complex and the U.S. wheat complex, even given that global production is starting to decline. But we just have a lot of wheat, and certainly even with all the changes, I think prices will continue to deteriorate here for a little bit.
Yeah. Well, and Ben, I guess just real fast, maybe the final point today. At what point do we see the potential for a little bit of support, come through that wheat market, and maybe even more residually, looking at the entire grains and oilseeds complex at all? Because we've been kind of stuck in this pattern of trading slightly lower week over week for several weeks. How do you break out of, or when does the market have potential to break out of this pattern, barring, an unforeseen event?
Yeah. So I'm gonna answer this with like two sides of a coin, right? So it's the typical two-handed economist here, right? So we have seen deterioration really in the Black Sea region and even in France, right? So French wheat has declined, and Argentina, I just talked about Argentina wheat, has the production has declined down there and is expected to decline even into next year. However, a lot of this is being offset with Canadian wheat production. Canadian wheat production is expected to be up 11% this year compared to last year. And really, Canada being such a large wheat producer has really kind of helped fill the gap that we've seen in other areas, and especially from the North American block. If we think of North America as a block, Canada wheat has basically filled the void that we thought maybe the United States could help pick up, right? The opposite, the other hand of this, and again, two-handed economist, the thing that is sticking out there that I think could create a bullish spark in the wheat market and potentially help carry the feed grains a little bit higher is we do have this pending potential Canadian rail strike coming up here in about 2 weeks. They said they're going to announce their decision on Friday, August 9th. Given how much, or given the importance of Canadian wheat to the global market right now, the fact that if we saw a rail strike in Canada at basically wheat harvest for them or close to it, the impact that they could have in supplying wheat to the market, and maybe some of that business then comes to the United States. So that's the spark that I think is hanging out there for the U.S. wheat picture.
All right. Well, Ben, it's always a privilege to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about what we do in our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. You even have some more wheat discussion there, potentially. Keep your eyes open for that. Ben, thanks again. I'm Will Robinson on Brownfield.